All right, so I think I think it's now recorded. So, good afternoon, everybody, and thank you for joining us here this afternoon. My name is Reginald Parson, and I'm the Deputy Director with the Maine Paid Family and Medical Leave Program, and I'll be moderating and leading today's webinar with the National Federation of Independent Businesses in Maine. With me is Belinda Donovan, our wonderful partner at Ethos that will be assisting us with this public education campaign. And also is Luke Monahan, who's present here, who's the director of the program. We are extremely pleased that you are joining us here today. I would also like to state that today's event is recorded and will be posted on our webpage on Paid Family and Medical Leave. I would also like to take this time to thank the National Federation of Independent Businesses in Maine for being a wonderful partner and working with us to host this webinar. So now at this time, and I don't know if David is present or someone from NFIB, but I will allow you to open it up to say any remarks if you would like. So we have a pretty wide group, so I'm gonna scroll down the list and see if I can find David. And if you're present, let's see. David, can you hear us?
I can hear you. Can you hear me?
Yes, awesome.
Yeah.
Yeah, thank you, and happy to hear any remarks you might have.
Thank you. I am David Klaus, State Director in Maine for NFIB. I just have a couple of quick comments. The Paid Family Medical Leave Law is the most impactful labor law ever enacted in Maine in terms of its overall cost and scope, expected usage by workers and the self-employed, and effect on daily management of workplace staffing. NFIB is committed to helping smaller employers understand how the law operates and what small employers need to know. Luke and Reggie are also on a learning curve and very busy with implementation. This webinar is part of a dynamic learning process. Your questions and insights help them and everyone gain knowledge that will be invaluable going forward with regulations, interpretations, explanations, and wrinkles that may need special attention. And I can say that working with Luke and Reggie, they are very interested in your questions and comments now and going forward. So thank you again. And Luke and Reggie, turn it back to you.
All right, awesome. Thank you, David. We really appreciate that. So, all right, and so now at this time, if there are any members present from the Paid Family and Medical Leave Benefits Authority, please raise your hand and we'll acknowledge you. But it's a pretty good attendance amount, which is very good to hear and see. All right, so I'm seeing no one from the authority. But again, oh wait, I see one hand. That might be. I see one hand. Oh, it went down. All right, never mind. It went back up. Sorry. It's all the way at the top. Oh, it's all the way at the top. Oh, maybe not. It's Joan. Oh, it's Joan. Okay. All right. Hi, Joan. Okay, sorry, we found you. All right, Joan, can you hear us?
Yes, I can.
All right, awesome. Thank you, Joan. Yeah, please feel free to offer any remarks you might have. Or if you have any.
Oh, no, thank you. Just
Oh, okay, perfect. Okay, just wanted to give you that space, just in case. So thank you. All right, so today, so the whole purpose of really today is to provide a brief overview of the Paid Family and Medical Leave Program and some key information to know as we continue to move forward with implementation of this new and exciting program. So after the overview, we'll answer any questions, and we certainly encourage you to put your questions into the chat, and we will certainly answer them after the conclusion of my presentation. So with that, I will go ahead and begin sharing my screen. So bear with me for 1 second. All right, so I guess we can, yes, okay, perfect. Everybody hopefully can see the PowerPoint presentation. So we'll begin with a general overview. So in July of 2023, Governor Mills and the state legislature adopted paid family and medical leave. Maine became the 13th state in the country to adopt a paid leave program. And this law will provide up to 12 weeks of paid leave for either family, medical, safe leave, or leave related to a member's impending military deployment. And we'll talk more about the types of leave in a later slide. But as David iterated before, this is a wide-reaching law. So this will apply to many employers and employees in the state of Maine, with the exception of the federal government, and that was due to a statutory, clearly a statutory exemption that the federal government and their employees will be exempt from the statute. So again, to talk about the reasons for leave, it can be taken, and these are just more general examples. But family leave, it could be to either folks who may be expanding their families or to care for a loved one that may have a serious health condition. Or it could be for medical leave, which is to care for your own medical needs. So as an employee, you're caring for your own medical needs. For safe leave, it's to help either the employee or the employee's family member stay safe after abuse or violence. And then finally, military deployment. And one example could be you have a husband and a wife, and maybe the husband is going to be heading to active duty, and the wife might be, for example, handling the transition of that deployment or vice versa. But either one, it could be a spouse. So those are the general reasons individuals could take leave. So here is what employers and employees should be expecting in 2025 and in 2026. So the first thing that is coming up, and we definitely are reminding individuals through our various webinars and various meetings, that payroll deductions for this program will begin in January of 2025. And we'll talk more about what the premium or the contribution requirements are. But things that we have to do on our end is to adopt a rule. So we are working incredibly hard to meet that January 1st, 2025 deadline. We've had 2 rounds of public comment. We've had 2 public hearings on the rule. We've done a ton of informal listening sessions. So we have done as much as we can in the time that we have to get feedback from a wide group of stakeholders. But there's one thing that employers will need to keep in mind, and that is in the winter of 25 or early 2025, the launch of the Maine Paid Leave Contributions Portal will happen. So this is where employers, and including any out-of-state employees that have Maine employees, will have to register for the program. This is where employers will be able to self-report how many employees you may have. And this is where also private plan application process potentially will be used through that portal. But again, more information to come, and then we'll be happy to answer any questions that come from the presentation. And then finally, in May of 2026, benefits will go live for the program. So to talk more about the premiums, so essentially both the employer and the employee have a financial stake in this law. The contribution rate for the employee is set at 1% of their wages. That's split between the employee and, again, the employer. There are certain groups, I guess I'd call that certain groups, that could elect coverage, and that is self-employed individuals and tribal governments. And by electing coverage, they will be paying 50% of the premium rate. But to talk more about the premium aspect of the contributions, we provided 2 general examples of employers with 15 or more or under 15. So we use the example of $1 million a year. And by using that 1% premium rate, the premium rate for this employer would be about $10,000. The employer will be paying 0.5%, and the employees will be paying 0.5%, equaling 1%. However, if you are an employer that's under 15, that's gonna look a little bit different. So again, we use a general example, and again, the 0.5% for this employer will be about $1,250. You might ask, why is the premium rate different between an employer that's 15 or more or less? Because employers with fewer than 15 employees, that employer or the employer is exempt from having to pay the 0.5% employer share, but 0.5% must still be deducted, and that can come entirely from an employee's pay. Or the employer could voluntarily pay that 0.5% on behalf of the employee, but that's a voluntary thing and is not required. But either way, 0.5% still must be deducted. And then finally, the premiums or the contributions are going to be going to the Paid Family and Medical Leave Fund. This is a fund that's going to pay for benefits and any administrative costs to operate the program. So this fund essentially is a trust to be used only for those purposes. So to break down kind of what the premium means like on a daily basis. So when January 2025 comes around and payroll deductions are beginning, what does it look like? So we use three different wage examples. So someone who's making about $35,000 using that 0.5% premium rate, it's going to be a little over about $3.36 a week, or $175 for the year. As you see, someone making about $57,000, it's going to be about $5.48 a week, or $285 a year. Or someone who's making a higher income potentially is going to be paying generally $8.65 a week, or $450 a year. One thing to also add, that the premiums are also capped in terms of the total yearly premium amount at the Social Security wage limit. So that is a number that the Department of Labor has no control over. That is a number that comes out annually by the Social Security Administration. So and that's required in statute, that we have to cap the yearly premium at whatever the Social Security wage limit is, and happy to clarify that, what that means. So there are some requirements and eligibility to consider for this law. And I'll first talk about notice. So absent an emergency, and notice is may look a little bit different under an emergency kind of situation, but generally employees must give the employer notice. You might see the term reasonable notice. In the proposed rule, we said 30 days could constitute reasonable notice on the employee scheduling their leave or their intent to take leave. I would say that 30 days is subject to a final adoption of our rule, but that 30 days is generally the standard for every paid leave state based on our research, including the Federal Family Medical Leave Act. And I know that has a little bit of different language in terms of, that, but it's generally 30 days, or I think it's practically possible. I think that's what it is. And then when it comes to proof, proof will have to be provided. And so during the application process, and again, we're fleshing out that application process, as we continue to move forward and get to 2026, the employee is going to likely have to provide that proof. So if it's a medical leave, they will likely probably have to provide a medical certification. If it's for a different type of leave, qualifying reason, they might have to provide different documentation. So we hope to flesh that out later in the process. So yeah, please stay tuned for that part. And then finally, well, not finally, the next bullet point is there is an income requirement attached to this program. So an individual must have earned 6 times the state average weekly wage in 4 of the last 5 completed quarters. You might be asking, what is the state average weekly wage? That is a number that is published on an annual basis by the Maine Department of Labor. So we used 2024 numbers, which is $1,144. And in 2026, that number might look different. But how we're calculating whether someone has met that earnings requirement is using the example that we have here of multiplying $1,144 times 6 that is the earnings amount that someone would have to earn during those 4 of the last 5 completed quarters before accessing the benefit. Employees, especially if they're working more than one job, could hit that earnings requirement, you know, even before so essentially it could hit that earnings requirement if they're working more than one job. And then finally, the scheduling the leave must not cause an undue hardship unto the employer. We're happy to try to answer some questions about that, but that is something that is required in statute in terms of that term undue hardship. And we've said in every webinar, Maine is the only state, well, more than just this webinar, but we've said publicly, Maine is the only state in the country to have undue hardship when it comes to paid family and medical leave. So this is a new concept that I think both the employers and employees are gonna have to navigate through. We did put into our proposed rule kind of a framework of how to determine undue hardship. And again, we're happy to have that conversation, but I think when the rule is adopted, that is where I think both the employer and the employee will have the opportunity to digest what that actually means. So you might be asking, okay, I'm paying premiums, what's the benefit? Good news is there is a benefit. The benefits will be based on a tier 1 and tier 2 wage replacement. So, and it's all based again on the state average weekly wage. So once an individual applies to us and we look at their weekly wage, and if their weekly wage is at or less than 50% of the state average weekly wage, they're gonna earn a 90% wage replacement. For any earnings over 50%, it's gonna be calculated or replaced at 66%. And then once we find out the tier 1 and tier 2 benefit amounts, we put those together, and that's essentially the weekly benefit amount someone would be earning on paid leave, and that's again all depending on their wages, what their individual wages are. But the benefits are capped again at the state average weekly wage. So when 2026 comes around, the $1,144 may look a little different. Again, using some benefit amount examples based on income, you'll probably see why is everybody earning $514 on a 90% wage replacement. And that is based on, again, whatever 50% of the state average weekly wage is. So that's how we get to that tier 1 benefit amount. And I will kind of go to an example of someone who's making a little bit more on a higher income scale. Even though once the benefits are calculated, you would assume that they would be earning whatever that amount is. However, if their weekly benefit amount exceeds the state average weekly wage, we have to cap it, and that's required by law. So it'll be capped back at $1,144. But again, happy to try to answer any questions from it. So to talk about the portal, this is going to be another portal that is going to be a new one. We are working extremely hard, and we have a great team and vendor who's been working with us to develop this portal. But this portal is where, again, you'll be able to self-report how many employees you have, but also file the wage reports and the quarterly premiums that will be due. And again, we're happy to chat more about that. But the portal will also allow self-employed individuals and tribal governments to elect coverage. So again, this is a group that is not required to participate in the program, but if they decide to, they'll be using the portal. And then finally, the wage reports and the premiums for the first quarter of next year will be due in April. So some additional information for employers on the call. So there are job protections surrounding this program. So individuals who have worked for an employer for at least 120 days is entitled to job protection, meaning the job that they held, including any benefits that they were given prior to taking leave, or a job that's equivalent to the one that they had before they took leave. And I guess to talk about kind of the portability, because again, we know that workers, they work more than one job. You know, and so these benefits are portable. And again, I know you might be asking or might ask about private plans. But if an employee that works for an employer that's part of the state plan and goes to another one that works for the state plan, they won't lose their eligibility. I mean, they have to apply for the program to determine that eligibility, but by working for different employers that's part of the state plan, they essentially won't lose their eligibility in a broader context. And then finally, there is notice requirements for in notice requirements to employees. So employers must notify all employees about paid family and medical leave. We do have a poster that is available online, and so these are just posters that you'll probably see in every break room across the state. Since it is available online, we would encourage the employer, especially employers on the call, to post it as soon as possible, so that your employees are aware about paid family and medical leave, and especially when deductions begin in January 2025, they won't be hopefully not too surprised. But there are also some other statutory notice requirements that I would encourage folks to look specifically at the law about. Because one of the things that, as a result of, if you don't, as an employer, notify your employees, the employee's obligation to let you know as the employer, hey, I'm scheduling leave or intend to take leave, is waived, and that is part of our statute as that requirement. So, three things that we would love for you to do. Is one, visit our webpage at www.maine.gov/paid leave. There you'll find our FAQs, you'll find up to date, and this is, when I say up to date, it's also evolving, information such as an FAQ, general overview PowerPoint, and then we also have a one-pager for employers on what they need to know ahead of 2025, and that's another great resource to think of. And also stay up to date by getting notified. When you go on our webpage on paid leave, you'll see in the get notified, well, you'll see it right on the homepage, you'll say get notified. Please put up whatever email address you would like to provide. And so anytime the department announces updates to the program, you will be notified. It's a pretty straightforward process that shouldn't take too much time. And then finally, for employers, please register for the portal as soon as it's available, as it'll be key to, putting your ease at mind about navigating through what is this new system. And obviously we're here to address any questions that might come after the official launch. So with that, I will stop sharing my screen, and I know that we have some questions that are coming in. So I will go ahead and start. I have quite a stack on. Can you confirm the size of the employer? Is it only Maine payroll? Based on payroll?
It's when you're doing your count to the 15 premium threshold, it's any Maine employee as we define in our proposed rules. And I would encourage everybody to, like Reggie said, go to the maine.gov/paid leave website, go to the employer resources tab, and click on what the employers need to know for 2025 one pager. And that kind of specifies how you kind of do the broad strokes of counting your Maine employees. But when you're counting to 15, it's only Maine-based employees when you're counting and calculating premiums.
Okay, awesome. And so will employers need to report the hours worked for any quarterly contributions on their report?
They do not. So the data points right now that we're looking at for wage reporting is first name, last name of employees, their social security number or their ITIN number, and then their wages for the quarter. So we are not asking for hours worked. We're not even asking for what the premium breakdown is between employer and employee. So we're trying to keep the information reporting to us very streamlined. So it's employee, first name, last name, social security number, and the wages for the quarter. When you go into register, you'll have some business information that you'll need to enter. You'll need your FEIN number, your business address, your business phone number, corporate officer, who you want the emails to go to. If you want to opt into text messaging, you'll have to answer the employee size question as part of the Maine paid leave registration process, and you'll set up an account, but we're trying to minimize the amount of information we're requesting of you all to track to try to make it easy for everybody.
And I see a couple of hands that are raised, but based on our timing too, we also encourage you to put your questions into the chat so we can get to them. But can you define what is an employee?
So the employees defined in statute, and it's a pretty broad definition. It's really anyone who earns wages in the state. And that's where you really need to hone into with our proposed rules. So it's anybody getting remuneration for, services provided who's not a self-employed person, not an independent contractor.
Right.
But it's a very technical definition, and so employee basically in statute is anybody who earns wages as we define. So it go to our proposed rules and look at section 2, and it's wages paid in the state. Basically, anyone who earns wages paid in the state is defined as an employee, and that includes full-time, part-time, seasonal, per diem, anybody earning wages who is not self-employed, who is not a self-employed contractor. There's a couple exclusions in proposed rule section 2B, for instance, incarcerated people, federal employees, railroad workers, volunteers that might get a nominal stipend, and work study students. But pretty much every other employee who's earning wages, or not pretty much, every other employee who's earning wages is covered. It's covering 600,000 plus workers in Maine.
Yeah. So do we take PFML payroll deductions from elected officials who are on a payroll?
Yeah, so elected officials it depends on how they're paid and if they're volunteers, quote unquote, or not, but elected official does not equate to volunteer status. For instance, sheriffs are, elected officials, but they're full salary employees. They get paid, they get hired, fired. So, elected officials, state legislators, they're employees. It really comes down to the definition of employee versus volunteer. And we did put in a definition of what a volunteer is earning a nominal stipend, quote unquote, a nominal stipend in our second draft of proposed rules, section 2B. And it's the same definition of volunteer that state unemployment uses, but elected officials don't equate to volunteer. It's how they're paid and how they're treated as an employee versus volunteer. And sheriff, I think, is a great example. Sheriffs are full salary, sometimes making $80,000-$90,000 a year. So those are employees.
So how do you calculate the number of employees?
Accounting?
Yes.
Yeah, so I would ask people to go to the one pager on the website, and I think it breaks it down in pretty good plain speak. There is a section in proposed rules of how you do your count to 15, but I think the one pager puts it in a little bit more plain language that's easier to understand. But essentially, it's any employee that you have on payroll in 20 weeks, or excuse me, it's if you have in the previous year from October 1st backwards, you count if there's any 20 weeks, any 20 work weeks in that previous year that you had 15 or more, then you are a 15 or more employer. So it's any of those 20. It doesn't have to be 20 consecutive. Any 20 work weeks in which you had 15 employees or more in the previous year, previous to October 1st, 2024. And every year thereafter, but the one pager puts it a lot more concisely in plain speak than I just did.
Awesome. So have payroll companies been notified?
They have. So we've been working with payroll companies for several months now. We've been working with the National Payroll Consortium, but also all the independent payroll companies that we can think of. We've sent around what they look for is the bulk wage specifications. Which is how basically the data points that they need to track in their bulk wage reports to file on behalf of multiple employers. We've been sending around drafts to the payroll companies for months now, asking for their input, and we're going to be putting our finalized bulk wage specs on our website. I think within a couple weeks for everybody to pull from. But if you have a payroll company, and this is important, if you have a payroll company that has not received our bulk wage spec reports, please email David Clow, and he will send us a list, compiling to whatever responses he gets, and we'll make sure we send our bulk wage specs to those payroll companies as well. But they will also be on our website, hopefully within 2 or 3 weeks maximum. But we have been working with payroll companies for several months because, you know, they have to do a lot of prep work with their computer programming for this, so.
All right, awesome. And thank you again for all of the questions, and hopefully we can get to them in the next 30 minutes. But is the annual payroll capped at $1 million? So it's not, that was a general example that I used for educational purposes, but the law doesn't cap annual payroll. So is it the main payroll or the whole company regarding the employer size? In terms of, I think it goes back to the employee count, like how.
Yeah, it's, you're only paying premiums on your main base employees.
And what if the employee fluctuates from 15 to 20? So these might be our seasonal, you know. Or
Yeah,
employees that-
any wages earned of a main base employee are counted and reported for contributions and premiums.
When is the employer contribution due and how will it be paid if the portal is not launched in 25?
Oh, the portal's definitely gonna be launched. So we're expecting the portal to be launched in early 2025. And we'll announce the date, as we get closer. We're actually gonna have 2 demos in December. And we'll put out a press release and we'll put it on our website as we get closer. One of the demos for the new Maine paid leave portal will be focused on employer functionality, like what you need to know when you're going in to register for an account. Registration, we're guessing takes about 15 minutes. We've seen it done. We're doing it ourselves, walking it through. It takes about 15-20 minutes or less, if you have all the information ready. So we'll have a demo of that in December, with the date to be announced. And then we're also gonna have a separate demo in December for payroll company TPA functionality. So what they need to know to file bulk wage reports after employers have registered. So we expect, or we anticipate that the Maine paid leave portal will be rolled out in early 2025. And that'll allow, a full 3 months for employers to go in and register their accounts, designate a payroll company if they have one and they want the payroll company to file on their behalf. And then the first quarterly wage reports and premium remittances can start after the close of the first quarter. So those will start on April 1st, would be the earliest that you could submit your wage reports and pay your premiums through the Maine paid leave portal, and they're due by April 30th. And then every quarter thereafter, it's the first day of the close of the quarters. So July 1st due July 30th and so on. So
Awesome. Is it the employee premium deduction pre-taxed?
yes, so the 0.5% comes off before you take out taxes.
And then are New Hampshire employees gonna be eligible at 100%? Are they prorated?
So it depends on where the employee's work is localized. And again, I would go to the one pager and it helps define what a Maine based employee is. So for instance, if you have somebody who lives in Portsmouth, but they work 40 hours completely in Kittery, so they live in New Hampshire, but they work full-time in Maine, all their wages are earned in Maine. They're a Maine based employee who you'll be paying full premiums on. And if they draft a benefit, they would receive a full Maine benefit. But it really is on the locality of where the work is performed. And the one pager helps explain what that locality test is.
So this is kind of a benefits question. Are they taxable?
So the benefit taxability, we do not know yet. The IRS has not given guidance to any state PFML program, including ours, about whether PFML benefits, paid family medical leave benefits, are taxable. Reggie and I actually met with the IRS, along with every other state administrator in the country a couple months ago. And they said they were preparing guidance to release to the states by quote unquote summer 2024, which obviously we're past. So we're hoping for it very soon. And certainly before our benefit start date of May 1st, 2026. We are looking to clarify Maine income taxability in next session, because we have control over that, but we do not have obviously control over federal taxability of benefits. So we are waiting for IRS guidance that we're hoping to have before May 1st, 2026.
So does does paid family medical leave replace earned paid leave program, or will they be both kind of seemed?
Yeah, they both exist separately, because earned paid leave is essentially required PTO time. So it's sick time or sick or vacation time that employers provide for their employees, and it's used differently from paid leave. So they're separate laws and, you know, they'll go hand in hand in some ways, but they are separate laws.
Okay. And so we got a question about explain the state average weekly wage. So, hopefully I can clarify. So again, this is a number that is published on an annual basis by the Department of Labor that takes into account wage data in the private and public sectors. And that's how you develop the state average weekly wage. The paid family and medical leave law is using that state average weekly wage. So in some ways, the law can't control what the number is, but we just have to base our calculation of benefits on that. So school employees, so if a school employee is paid using federal funds, are they exempt?
It depends on who their employer is. So if it's a Maine employer, they're not a federal employee, so they're not exempt, no.
Kind of like a portal question. Will there be a set percentage we can enter into our system that automatically goes into the portal?
I don't know if that's asking about the bulk wage. I'm not sure what that's getting at, but if it's about if this is a TPA asking about, like, if you have a bulk wage report and you have 50 clients and 3 aren't registered by the time you submit a bulk wage file, is that file rejected? And the answer is no. We set a threshold, so if you had like 80% of your clients were registered, by the time you're doing a bulk wage file upload, that file might get rejected. But if you know, a certain percentage, a low percentage of your clients are not registered, that bulk file won't be rejected. Those suspends for those employers will be, or those returns for those employers will be suspended. But the bulk file will not be rejected.
Okay.
Oh, I don't know if can you read that question again?
Will there be a set percentage we can enter into our system that will automatically go into the portal?
So I don't know if that's asking about like prepay or like if you're doing a withholding, who holds that money before the quarterly remittances? And by statute, the quarterly remittances are done quarterly. So if there's withholding, well, there's obviously withholdings happening. The employer or the TPA has to hold that money until the quarterly remittances due.
Okay, so someone asked about when to post the poster, about the notice to employees. Since it's available, I would do it now. Because that would give the employer and really the employees too enough time to, you know, look more into the law and find out. Yeah, so you can post it now since it's publicly available. So explain the CBA or the collective bargaining agreement on school employees. I know we have an FAQ.
Yeah, FAQ I would refer to, but essentially it's a complex process. So I would defer to the FAQ, but I'll try to summarize it. If there is a public sector, so this does not apply to private sector collective bargaining agreements, and that's by statute. I don't know why they made that designation. But if there's a public sector collective bargaining agreement that was in effect when this law took effect, which was 10/25/23. So if there was a public collective bargaining agreement in effect before 10/25/23 that has not yet expired, anyone under that collective bargaining agreement is right now outside of the law until the first time that collective bargaining agreement expires. So people under that collective bargaining agreement would not be contributing premiums, and if for some reason that collective bargaining agreement hadn't expired by the time that benefits went live, they would also not be eligible to draw benefits. Once that collective bargaining agreement expires for the first time, they are then back within the law. So for example, if you had a teacher contract that was in effect July 1st, 2023, that has not expired, but does expire July 1st, 2025, you would not be paying premiums up until July 1st, 2025, at which point you would be paying premiums and would be eligible for benefits come May 1st, 2026. But it is a very complex process, so I would defer to the language in the FAQ. And that's something that would put in statute, that kind of consideration of collective bargaining agreements for public sector employees specifically, not private sector.
Right. Yeah. And again, we have just a little under 20 minutes, and I know the hands are still raised, so we would definitely encourage you to put your questions into the chat. So is the 12 weeks of job protection under this law on top of 12 weeks of FMLA?
So by statute, they had to be run concurrently. And so if somebody applies for Maine paid family leave and is approved, the employer has the right to designate time, or I think actually has a duty to designate leave time as federal FMLA time. And they run that time concurrently, so at the same time with Maine paid family leave time. And the intention is to prevent somebody from getting 12 weeks of paid leave and then also 12 weeks of unpaid leave within the same benefit year. They're supposed to be run concurrently by statute. And when people apply for paid family leave, we're going to be asking on application if they've taken any previous unpaid family leave in the previous year. And we're also going to be asking that same question to the employers. And if they have, their leave bank for paid family leave will be reduced by that amount to try to prevent the situations where somebody would have 12 weeks or essentially 24 weeks combined in a benefit year.
Okay. We're gonna switch a little bit to private plans. So if employers have private plans, can the employer stop contributing after April 2025?
So private plans need to be approved, and part of that is defining what substantial equivalence of a private plan is, which is dependent on rulemaking. So everybody is contributing as of January 1st, and any premiums paid for the first quarter are owed for everybody, and they're not refundable. Starting April 1st, 2025, according to proposed rules, businesses can start submitting to us private plans that they have bought either on the private plan market that will be established once rules are finalized for a fully insured product. So a product you would buy from an insurance company that has previously gone to our Bureau of Insurance and had their plan certified as substantially equivalent. So you would either buy one of those plans and submit it to us, or you could self-insure, which is essentially a self-insure is an insurance plan that you're essentially capitalizing and running yourself. So you would be responsible for the administration of those benefits. You would have to pay out the benefits and you would have to do all the administrative work of it. And since it's a self-insured plan that doesn't have the capital kind of regulations that a fully insured plan is, you have to bond it to the state. So if that plan fails, we can recoup the losses for that plan. So there's kind of two routes you can go down by statute. You can purchase a fully insured private plan product from an insurance company, or you can look to self-insure if you have the capital and the administrative capacity to run an insurance policy essentially yourself. Those plans can be submitted starting April 1st in the portal, and then they can be approved. And once it's approved, it's a kind of a complex process of when the exemption start date is relative to the approval. And I would refer to the proposed rules for that. But the important piece is that everybody will be in for the first quarter, and first quarter premiums are due for everybody until we can ensure that these plans are, substantially equivalent, and that the trust fund is, capturing the money it needs and not having employers jumping in and out and potentially raising costs for other people. And we will be releasing a lot of information about the private plan exemption process or substitution process once rules are finalized. We'll be updating our FAQ section and also putting out some kind of presentations, some narrative presentations about what private plans mean and how to apply for one.
Awesome. Again, we have just under 15 minutes, so put it in the chat and we'll try to address as many questions as possible. But this is a good question. What about employees who switch employers? They go from the private plan to the state plan, the state plan to a private plan.
Well, the program is designed so that there should be hopefully seamless coverage. These are portable benefits that somebody is covered regardless if they're working for a private an employer that has a private plan and then moves to a public plan employer. And part of that is even if you are approved for a private plan substitution, you're still obligated. You're exempt from paying premiums, but you're still obligated to submit wage reports quarterly, and that's to capture the wage data that we need to create the benefit base, essentially, that if one of your employees who is working for you under a private plan covered company moves on to a company that is covered by the public plan and applies for benefits, let's say 3 months into that job, we have the wage base from their previous employer to pull from, and their benefit is correctly calculated. So the program is designed that any Maine worker should be able to work anywhere in Maine and have coverage either under a private plan or a state plan, hopefully pretty seamlessly, and have an appropriate wage base developed and benefit calculated from that.
Okay. Just going to switch to the portal. Will the portal allow for TPA?
Yes. So every employer does need to register for an account. So we captured, the business information. And then once you're registered, you can designate a third-party payroll company to file on your behalf. And the payroll companies, like I said, we've been working with them. They're actually going to be joining us for usability testing of the portal within a couple weeks. And once they're designated, they can basically take over the filing of the quarterly wage reports and even the premium payments if you designate that authority to them.
So just reminding, when will the portal be available?
So it's gonna be, right now, we're using the phrase early 2025. And as we get closer, we will announce the hard launch date.
Yeah. Will the portal be friendly to use?
Yes, we're trying, like I said, we're trying to design it to ask for the least amount of information possible. We're trying to use user-centric design, intuitive design. If anybody's familiar with the Maine tax portal, which I assume many or all of you are, it's the same company that built this Maine tax portal, and I think the Maine tax portal is, relative for a tax collection system, is pretty well received. And so it's gonna feel a lot like that, but also much more streamlined, because our law is much less complex than obviously state income. So we are looking to make it, user friendly. We are pulling in, like I said, users for user testing in a couple weeks, which include TPAs, but also employer representatives from a large employer, a small employer, and I believe a public sector employer as well to get different perspectives.
Will the employer be assigned a new EIN if you use this portal?
No, well, you will register your account with your FEIN, and that's how we'll track you for wage reporting. The system does also generate you a unique user ID. But in terms of the bulk wage reporting, we don't need that unique. We will ask the TPA to put it in the bulk wage eventually, but we're not going to reject the bulk wage report with that unique identifier number. But in terms of how we're going to track the employers and how they register, it's with their FEIN. And TPAs, as long as they have the FEIN on their bulk wage report, can use that.
Yep. Okay, so it's gonna switch it up so we can maximize our time. Can you again explain the types of employees, about seasonal, temporary, full-time, part-time? How are they affected?
I would say any wages earned in the state of Maine. So that's of an employee. So that's full-time, part-time, seasonal, per diem. You could have somebody work 2 hours on 1 week. Those are covered wages. There's no prohibition in the statute of any type of worker. It's any wages earned in Maine. And I do think the one pager covers that as well. So maine.gov/paid leave employer resources, what employers need to know. But it's any wages earned in Maine, regardless of how little they might make. There is no income cutoff that it's not reportable.
Do owners count as employees towards a 15 count?
So it depends on your corporate structuring. And so if you receive wages from your own company, those wages, if you're pulling them as a salary or as an employee, those wages are subject to PFML, yes. If you have a straight, and again, it depends on your corporate structuring. If you are self-employed and your income is solely based on the profit and loss, based on the self-employment, the profit and loss is not subject to PFML automatically. However, if you're self-employed and you only have self-employed income based on profit and loss of the business, you have the option to opt into the program if you choose to receive coverage. You would pay 0.5% of your income in the previous tax year, I believe is how we defined it. And you would receive coverage just like everybody else if you wanted to essentially have this coverage for yourself. So it depends on your corporate structuring and if you receive quote unquote wages from your company as an employee, or if you just have straight income from the profit and loss.
Okay, so what about non-federal work study employees? Are they eligible?
So I don't know if that's asking, like, if you have a college worker who's just working at like the cafe and it's not work study.
Assistant, yeah.
Yeah, like those are wages, so they're covered. We're only exempting the income that's from federal work study because it's federal financial aid. But if you have a college student that's working a quote unquote regular job that they're earning wages, even employed for a college, but it's not part of work study, those are covered wages that need to be reported.
Okay. Are the deductions per day, the premium deductions, will they be based on the daily basis?
I'm not sure.
Yeah, I think, so for the deductions, I think it would be, we know everybody gets paid, but it would be when your normal bi-weekly or monthly payroll deduction will happen. That is when the employee will see, oh, 0.5% came out. Yeah. But it's not gonna be 0.5% per day. It's gonna be, 0.5% total, for that pay period. So can you clarify, again, what service directed and control in Maine means? Like it kind of goes back to.
Yeah, we try to put it even more plain speak, in the one pager, because like I said, we use the locality test from state unemployment, which is very, legalese. So we try to put it, in plain speak in our FAQ, but then for the one pager, we try to make it even more straightforward. So I would defer to that language, but I'll summarize it, quickly with the caveat that I still would refer to the language that it's where the work is performed. So if you're working and living in Maine, you don't leave the state, you're driving to your job every day, and it's within Maine, obviously you're a Maine-based employee. If you're working fully remote in Maine, even if your company is outside of Maine, but if you don't leave the state, and you're working on your computer all day, and it might be a company in Wisconsin, but you're not leaving the state, you're working in your home office, every day, you're a Maine employee. It gets weird when people are crossing state borders. So if somebody's living in New Hampshire, but working full-time in Maine, that's a Maine employee. But the reverse is not true. So if you're living in Maine, let's say you live in Kittery and you're working 5 days a week in Portsmouth in person, and you're performing no work in Maine, you're a New Hampshire employee for the purposes of that. And then it gets even more into the weeds that you work in several states, and that's where I would defer to the FAQ and the one pager language.
Okay, so what if an employer wants to cover part of the 0.5% and not all of it?
So they have that discretion per rules, as long as you cover the same percentage for all your employees. So not covering, let's say, so I think they're asking, can you chop up, how much you cover? So like you have your 1% premium liability, let's say, and instead of deducting 0.5% from your employees, you choose to deduct 0.2% from your employees. You have the ability to do that if you want, but you have to do it the same for every employee in your company. You can't do, a better deal for executives versus line staff. Unless, and this was feedback we got from schools and public workers, it's dictated otherwise by collective bargaining agreements where you might negotiate different rates with different collective bargaining agreements within the same employer. So you certainly have the option to chop up the premium obligation if you want, as long as you do it the same for all your employees. And the other important thing I'll mention is that we're not even going to be asking you what that chop up is when you report wages to the Maine Paid Leave portal. We'll just be, calculating your premium liability as 0.5 or 1% based on your business side. And then you'll be, reporting the wages and paying premiums based off that. But the important piece is you cannot deduct more than 0.5% of wages from your employees ever. The cap that an employee can ever be deducted from is 0.5%. So you can't ever go above that.
Okay, so what if an employer is exempt under the Maine unemployment insurance law? Are they also exempt from paid family medical leave?
No, and that's a great question. So Maine unemployment law, our definition of wages in terms of like what money you include in the definition of wages and how you define locality. We pull language from the state unemployment law, but we do not have the same exemptions of employment types that they have. And that's an important distinction. And I'm glad somebody asked that question. They have in their law certain exemptions for certain employment types. So for instance, barbershops, I think, are exempt from state unemployment. Private religious institutions are exempt. I think lobster boatsmen are exempt. Our statute has none of those exemptions. So we use the same kind of calculation of what a wage is in terms of what you include for, tips and gratuities and stipends. We use that language, and we use the locality test of like, what is a Maine worker? But our statute does not have the exemptions that state unemployment tax has. It really applies to any employee in Maine who is not a federal worker, who is also not one of those 4 weird carve-outs that I mentioned in our rules: incarcerated people, federal work study, railroad workers, and volunteers with anomalous stipends. It's every employee.
Okay. So we have about 3 minutes. I'm gonna take the next couple of minutes to try to answer any questions. So can the employer request an independent medical evaluation?
No, not under proposed rule.
I think we might have just this. Can the premium be switched from the employer to the employee? If the employer pays the full 1%, can they switch back to 0.5?
They can, I think there's a requirement in rules, and I'd have to double check this, but I would refer to rules section 10 premiums. You can switch, you just, I think, have to give advance notice to your employee what you're doing.
Kind of going back to private plans, can the employer opt out of the program with an insurance policy?
Starting April 1st, 2025, as long as it's a substantially approved private plan. And so when we finalize rules, essentially, insurance companies will apply to our Bureau of Insurance to have certain they'll have to craft the insurance products. And then they'll submit those plans to the Bureau of Insurance, who will go through a checklist they have and determine if those plans are substantially equivalent. Along with us, we will do the ultimate certification of substantial equivalence for those plans. And then the insurance companies will go and they'll sell those products to employers. And once employers buy those, they can submit them to us starting April 1st, 2025. Or they can go the self-insurance route, which I mentioned before, and we'll put up what the self-insurance application looks like after rules are finalized.
Okay. So the last question is, will the state be providing how payroll companies can connect to the portal and upload the payroll data or upload files?
Yes, great question. So please go to maine.gov/paid leave and sign up for the Get Notified list. We will be announcing those 2 demos in December as we get closer. And then as we get portal information in terms of like what the exact date for rollout is, as we get closer, we'll announce it through those email blasts. And then we will also, once it's launched, we hope to have a customer service line launched at the same time with plenty of call agents to take questions and help people through the process. So please go to maine.gov/paid leave, sign up for the Get Notified list. And as the portal gets closer and more information is released, you will be in the loop.
Awesome. All right. So this has been great. We have hopefully answered a ton of questions. But the ones that we did not get to, we will certainly take them into consideration. But again, we want to thank David and the NFIB for again hosting this webinar with us. And again, we encourage you to go to the Department of Labor's website at www.maine.gov/paid leave. With that, I hope everybody has a great rest of the day. And also, again, this recording will be posted online shortly. So thank you all.